Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 5th of September. Starting with the FTSE 100, which rather disappointingly peaked out through the 50-day moving average and just where we didn't want it to peak out, i.e. 75.20, which was like the top of the recent bull flag, allegedly a bull flag, and then we bounced today off 7400, which was notional support, so that kind of worked. Above 7400 on an end-of-day close basis, we regard the technical glass as being half full rather than half empty. Still looking for that end-of-day close through the 50-day line. That's around 74.80 to take us up to the top of the February falling trend channel, 76.45, and the 200-day moving average. That's really the key for the UK market having a decent autumn, which is not normally the case in terms of autumn season-wise or anything else. Moving on to the DAX, and DAX also having a dance with its 50-day moving average in the recent past. Here you can see, though, that we failed just at the end of last month and trying to find support there at the floor of that rising December price channel, 15,600. Still the risk of a move maybe down to the 200-day line, 15,400. But if we can get away with the price channel floor there, then hopefully we will head back up to 16,000 plus later this month. Onto the Dow, which has been asleep for what feels like an eternity. Here the situation was last left at this market hovering around the 50-day line, 34,700. Want to stay above that on an end-of-day close basis to give us a move up towards 35,600 by the end of this month. Downside currently seen as being no lower than 34,100 at that October uptrend line, and the RSI was a bounce at neutral 50, so that gave or gives us a little bit of bullish momentum. On to Bitcoin, which still frustrates in many ways. Here the situation is that after that bull trap through the 200-day line, we see the market looking rather flabby and floppy. Recent support, 25,300, let's call it. End-of-day close below that, we risk 23,300 at the floor of that broadening triangle from back in March. If we're lucky, though, we may get away with bouncing off the uptrend line from January and then heading back towards 27 or 28,000. But at the moment, not looking good after that quick rally and then decline from the 200-day moving average. Onto the stocks, and again, a rather large selection. It's difficult to try and narrow it down. Just wanted to look at Amaroq, and the reason for that is that we've been in a rising trend channel since the end of last September. The break of recent resistance in the early 50s suggests that we could head up to the low 70s by the end of next month or even sooner. And as I said, I want to stay above the low 50s, 51, 52, ahead of a move towards 70 plus by the end of October. Given quite a lot of coverage already to Belluscura, and here the unfilled gaps to the upside. This is the third one we've had, is very impressive, a bit like the Artemis situation. And the view here is that while we're above the 200-day line at 43 pence, looking to 65 pence at the top of that rising trend channel from back in March, hopefully as soon as the end of next month. On to CleanTech Lithium, which is gradually recovering. And so it should after recent positive news flow. We've got a rising 50 and 200-day lines, so we're probably a week or two away from a golden cross. Normally the run up to a golden cross is the strongest part in the cycle. We've got a V-shaped bull flag here as well above the rising 200-day moving average, and we had an unfilled gap to the upside yesterday. All of that good stuff, and suggesting that we could hit 70 pence as soon as the end of this month, which is the top of that rising March trend channel. On to critical metals, and here it's trying to find support here at the floor of that falling trend channel from back in December. Ideally, we stay above the 16, 17 pence area and then head back up to fill that gap down from 20.5 pence. Best case scenario, maybe by the end of this month, would be back up to the 23 pence area while we remain above the 16 to 17 pence zone. The reason we're calling 16 to 17 is that initially that was a resistance for the shares back in basically this time last year. So hopefully old resistance will become new support. Onto a stock which is perhaps not that high profile, but may become more high profile. They've got Devolver Digital, and here you can see that it looks like we've got a rising trend channel base. We've had a gap close buy signal back at the latter part of last month, so maybe a couple of gap close buy signals, and above 18 pence, looking for 28 pence as soon as the end of the next month. If you're cautious, you wait for a break of that resistance line there from earlier this year at around the 20 pence level, just above the 50-day line, before assuming 28 pence is on its way. But bullish divergence started the rally, and we're going with that at the moment. Stock which has been battered and bruised in the recent past is E-Star Resources, but it looks like we've got a rising trend channel base here from June, and could at least head back to the old support area, which is around 2.75 pence, while we're above the rising 50-day line at 1.9 pence. So maybe a setup that some people want to go for. The upside there obviously limited by the old support, but obviously we could break that and break the 200-day line if we get going over the next week or two. On to Falanx, which I looked at and discovered yesterday. Here we've got a situation where the shares are looking as though they can give us a decent rally. We've got a rising trend channel base, top of the channel there at 33 pence, and rising 50-day line now as well, above that 50-day line at 22 pence, looking for up to 33 or 34 pence by the end of this month. GreenRoc is next, a stock which perhaps the cognoscenti are looking at. Here we've got the inverted head and shoulders there. We've got the neckline there from around the 4.6 pence level, above that 4.6 on an end of day close basis, especially with a rising 200-day line. We're looking for as high as 6 pence by the end of next month. Support there coming from both the 50-day line at 4.3 and the 200-day line just below 4.5 pence. Next up is Gfinity, which has revitalized itself in the recent past. Beautiful looking chart, actually. This is one of the better charting patterns around. The reason for saying that is that we've got the shares in a potentially inverted head and shoulders base, and we've broken the neckline there around the 0.11 pence level, and above 0.11, looking for the shares to head up to the top of that broadening triangle from the early part of this year as high as 0.2 pence, maybe as soon as the end of this month. But the key here is holding that 0.11 level, the April resistance line. The dirty work's been done with the inverted head and shoulders over the post-April period, and we've got a rising 50-day line as well. So looking good there on Gfinity, especially with the bullish divergence in the RSI window. We had a new low there in July, but the RSI trading higher. Interesting conundrum here at Helium 1, and the reason for saying that is that we have a notional bounce off the floor of that rising trend channel from November last year at 6.3 pence. Interesting that there's been a sell-off ahead of the spudding that we should have later this month, but if we hold above 6.3, we could zigzag back up to the top of that channel as high as 10.5 pence by the end of this month, which is obviously quite a punchy call because it's trying to factor in what will happen on a fundamental basis. On to Insig AI, which I've covered quite a few times from the 18 pence zone. We've just about hit our initial target there around 26 pence. In fact, we have hit our target. 26 pence was the high today. End of day close above 26, and we could be heading up to 34 pence by the end of this month. Ideally, we stay above the old May resistance at 24 pence. In the meantime, we've had a little golden cross there as well between the 50 and 200-day lines, which is always helpful. Next up is Molecular Energies, which had quite a defiant RNS today, underlining how the market seems to have undervalued it. Here we've got a rising trend channel there from December. We've bounced off that quite a few times now. It's currently the floor there around 122. Initial target here £1.40, which is the top of that November triangle, but the best case scenario would be up to £1.80 by the end of next month. If you're cautious, obviously waiting for the shares to break 140 and that resistance line. Only back below 120, delaying a recovery there. Miriad is next, and we are pleased to see that the shares have hit their first target. Rather unlikely scenario, I suppose, after the horrors of the past, but The line there around 2.2 pence, so we hit that, and an end of day close above 2.2 could take us up towards the 200-day moving average and the June resistance line projection as high as 3.3 pence by the end of this month. At this stage, only well below the 50-day line at 1.6 pence, really delaying the upside scenario, which was started off by bullish divergence late in July, lower lows there, but higher RSI trace, and we've followed up on that line ever since. The next situation is one that is perhaps also slightly on the surprising side. We've broken a line of resistance there from back in August at 11.2 pence. Above that, the initial obvious target is to fill the gap there up to 14 pence. And then after that, up to 18 pence, maybe by the end of next month. Ideally, the shares stay on the right side of 10 pence in the meantime, which was obviously the July support. But really want to see the shares head higher from 11.2 pence. Moving along to one of the stocks of the week, which has been Physiomics. And here, the clue to the rise was, once again, the unfilled gap to the upside, which was spotted very soon, actually, around the 1.2 pence level. And we've actually had another unfilled gap to the upside today to take us up to that target that we had around 2.6, 2.7 pence. In fact, we overshot the runway a bit, which was even better. End of day close through 2.7 or above 2.7 pence, and we're looking for as high as 3.75 pence by the end of this month. Ideally, we stay above 2.25 pence, which is firstly the floor of the gap, overnight gap, and also post-May support for the shares at the bottom of that gap. So hopefully the shares will go up and stay up on this occasion, which is rather rare. One of the more esoteric calls of the recent past has been RegTech, and here we had the rally from £1 to £1.90. The retracement was back to £1.70, so we're assuming another 90 pence move, which would take us up to 260. Let's see if the shares can deliver on that measured move target over the near term. So I suppose there would be in a rising trend channel, something like the one I'm drawing at the moment. And ideally, we stay on the right side of £2 anyway, as we did on the close yesterday. On to seed, where I know a lot of people are looking at the discount to NAV here, and finally seems to be kicking in. We got that resistance line there for resistance area from back in July. 2.4 pence broken over the course of this week, and looking for 3.1 pence by the end of the month at the top of that rising trend channel from the beginning of the year. Not expecting any price action now on the wrong side of 2.25 pence. Finishing up with another stock where the NAV is in play. I think it's supposed to be much higher than this, maybe at least 2 or 3 times higher than this. Broken neckline resistance on Tekcapital 11.25, looking for an initial target here at 14 pence or even 15 pence up to the 200-day line. 15 pence was resistance on the way down, so while we're above 11 pence, looking for that 14 pence plus zone. Only back below the 50-day moving average, which is now rising at 10.25, would send any alarm bells ringing. And we've got the bullish divergence from back in July with the lower lows then to back the turnaround situation. That's it for me today. More updates tomorrow.